Why did the Canadian dollar versus US dollar stand out to you? Again, I'll let everybody kind of read that through there. All right, perfect. So, Eric, if you don't mind sharing that next slide for me, slide 16, perfect. And then, yeah, and then maybe in a minute you can maybe, I don't know, maybe zoom in on the chart there. But so again, I've said this a number of times. You'll probably hear me say this thousands and more times, but I certainly like to keep things simple, right, and not overthink it. And the short answer is the signal. The signal really was the guiding light here. When I say signal, right, we do throw that term around, and for anybody who's new, what that really means is sort of it's the immediate term, risk ranges, right? So it's what is the risk range sort of implying from the probabilistic outcomes of its immediate term range, right? So on 12/14, the risk range put in a lower high, and that risk range was 0.726 to 0.746. So, December 14th is really right where, I've circled that dot there. That was that day. So, the interesting thing is that it put in, a lower high, right after kind of posted kind of a green day, right? So that 13th day, it was about a 63, I think it was about plus 63 basis points positive on the day, and again after kind of a couple down days, it was a relatively larger move in the Canadian dollar, right? So but the thing that you should be paying attention to here, or you should be noticing, or should try to start incorporating into your analysis, is the top of the risk range came down with the math signaling a lower 1 month high, and at the time that 1 month high was about what was exactly 0.750. So that 0.746 was below the 1 month high of 0.750. And again, what that's telling you is that, as this is again purely from a price standpoint, the pricing, or the math is signifying that you're not going to kind of make a new 1 month low. It's not quote like in the immediate term cards. Now, it doesn't mean that it won't happen, but it just means from a probability standpoint, the risk range is saying that you're going to kind of remain below that 1 month high. We continue to see these lower highs and really lower lows up until recently, in the last few days. But that's kind of from a weakening signal standpoint. You want to see those lower lows and lower highs being put in. So again, this is the box there on the right, the red to green is the current risk range as of this morning. And what you'll notice again is that it's a big lower high, right? In that top end of the risk range is significantly below the current 1 month high of 0.7, I believe it's 0.768, or sorry, 0.748. No, 0.7468. That's the number I'm looking for. But what we also kind of can see, and as we go out in time and space, and just something that I want to call out, is that, that circle there is also going to become the new 1 month high in 6 trading days. So as we go out in time and space, that purple box, the tail end of that purple box, which is the 21-day look back window, that's going to start to move to the right. And as you move to the right, it drops down to that first, green bar there. And then, after that, it'll start to drop down to the 0.7381 level, right? So that 0.7381 level is going to be the new 1 month risk range, the new 1 month high in 6 trading days. And so what you really want to do is you want to be paying attention to where that top end of the risk range starts to, how does that move, right? Is it still above there in terms of the 1 month high, or does it start to pull in? Does price continue to kind of weaken, and that kind of thing? So we're going to know a lot more kind of by the end of next week and going into the new year as to where how this signal is kind of shaping up. It continues to be one of the weaker ones out there, and interestingly enough, I think it's a big call out here in terms of, especially with this recent this recent crude oil move higher, kind of counter trend bounce, you really just seen the low end of the risk range sort of increase only slightly. And really it's kind of more consolidated than anything else, because that low end of the risk, or that top end of the risk range, excuse me, keeps kind of moving, staying flat to moving lower. So again, this is, it's a good call out. It was a good question. And yeah, hopefully that's going to be helpful for you guys.